You know, there's been this rare spring breeze warming up the South Korean stock market. But that could all be coming to a screeching halt. A sudden chill is in the air, and it's all because of some really controversial new tax proposals that have investors on edge. Today, we're going to break down this high-stakes debate that could literally freeze the market in its tracks.
And that really gets to the heart of it, right? What happens when a policy that's designed to be fair, to create a level playing field, actually ends up creating some pretty severe unintended consequences for millions of everyday investors? It's a classic dilemma.
Okay, so first up, we've got to talk about this plan to change who counts as a major shareholder. This is a really critical distinction because if you're labeled a major shareholder, you're hit with a capital gains tax that most other people don't have to worry about. So what they want to do is slash this threshold a lot. Right now, you're considered a major shareholder if you own more than 50 billion won in one company's stock. The new rule? It would drop that all the way down to 10 billion won. And while, yeah, that's still a ton of money, critics are quick to point out it's actually less than the average price of an apartment in Seoul. So does that really define a major owner? Good question. Now, to really get the main argument against this tax, you have to hear this analogy from Representative Lee So-young. See, your status as a major shareholder is only decided on one day, the final trading day of the year. This gives investors a massive, glaring incentive to just sell their shares right before the deadline. It creates this predictable mad dash for the exit, or as she puts it, everyone just rushes to the free toll booths.
And this isn't just some harmless loophole. It has real knock-on effects. It triggers this massive, predictable market sell-off every single year, what some are calling a sell-off bomb, and it's the small, retail investors who get caught in that blast. It discourages the exact thing the market needs, long-term, stable investment. And the irony of it all, it creates a recurring year-end sale for foreign and institutional investors who can just swoop in and buy up all those cheaper shares.
All right, let's switch gears to the second big problem on the table, the dividend dilemma. South Korean companies are, well, they're notoriously stingy with their profits. To try and fix this, two competing visions have popped up for how to encourage them to actually pay out more to their shareholders. And when you put these two plans side by side, you can really see this deep clash in philosophy. Representative Lee's plan is aggressive, right? A lower tax rate, a permanent change to the law, and it starts right away. The government's plan, on the other hand, is way more cautious. The rate is higher, it's only a temporary 3-year thing, and it doesn't even start until 2027. One feels like it's trying to make a real structural shift, while the other feels more like a timid experiment. And that tax rate, that's what a lot of people are zeroing in on. We're talking more than a 10 percentage point difference between the two proposals. So the concern is pretty simple. Is that small of a discount really a strong enough incentive for a company's big owners to start handing out profits that could otherwise just keep for themselves?
So when you peel back the layers of this whole policy fight, you find something much, much deeper. It's a philosophical conflict that's been right at the heart of the nation's economic thinking for a long, long time, the relationship between labor and capital.
On one hand, you have this traditional view, one that's really deeply rooted. It's the idea that income you earn from physical work, from sweat and toil, is somehow more legitimate, more noble. And from that point of view, income you get just from owning capital, well, that's seen as unearned. And because of that, it should be taxed heavily.
But the other side of the coin argues that's just old-fashioned thinking. That in a modern economy, especially with things like AI on the rise, a dynamic, active capital market is essential for everyone's prosperity. The argument goes that for workers to truly thrive, they can't just rely on a paycheck. They also need the chance to become owners of capital themselves.
To see what's really at stake here, it actually helps to look outside of Korea for a second and see how other countries have handled this relationship between everyday workers and the financial market.
Think about the US, for example. Retirement plans like the 401k have turned tens of millions of workers into long-term capitalists. And that creates this incredibly powerful virtuous cycle. Their investments fund their retirement, which gives them the security to go out and spend money, which in turn fuels the economy and corporate profits. That whole virtuous cycle, it's pretty much missing in Korea.
So you have to ask, why is there this disconnect in policy? Well, this data might give us a clue. Asset declarations show that many public officials have their personal wealth heavily concentrated in real estate. Stock market exposure? Minimal. And critics point to this and say, look, this creates a huge blind spot. If your own wealth isn't really in the market, you might not fully grasp how a rule change that seems small on paper can create such massive ripples.
So you've got these powerful ideas clashing, the market's hanging in the balance. What happens now? How does this all get resolved?
Well, this fight is definitely not over yet. The government's proposal is now heading to the National Assembly where it'll be debated this autumn. But the real date to watch is December 2nd. That's the deadline for all tax laws to pass along with the national budget. It creates this crucial window where political deal-making and public pressure can still have a huge impact on what happens in the end.
And all of this really boils down to one final huge question. While the debate might seem like it's about rules and numbers and tax rates, it's really about trust. Is the main goal just to perfect today's rules, even if they end up distorting the market? Or is it about building a trusted, predictable market for the future, one that encourages everyone to invest for the long haul? The answer to that question is going to define the Korean market for years to come.